So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here day after the release of the January 2024 CPI, the Consumer Price Index data. And in case you missed it, the data came in a little bit hotter than expected, as a certain Mr. Michael Scott would say. It was a little bit. Thank you, Michael. And when we look at it, we came in at 0.3% for the month, higher than the expectations of 0.2%, and core CPI came in at 0.4% for the month, higher than the expectations of 0.3%. So a little bit hotter than anticipated. Then over the course of the day, various different economists and branches of the Fed and different research groups come out and they put out their different, numbers as well. We have one that just is called median inflation, which just takes the middle reading. So if there's 100 numbers that are being measured for inflation, it takes the 50th, and that's median. And basically what that tells you, hey, there are half the prices in the series that are rising faster than this, half are rising more slowly. It's a good way to measure, kind of just what the midpoint is in terms of all the different stuff that's being looked at. The Cleveland Fed does something called trimmed mean, where they take pretty much the middle chunk of the inflation data. They get rid of outliers to the downside and upside and say, hey, let's take the trimmed mean, so average a smaller sample, and what does that look like? In each of these cases, we ended up with inflation numbers that were higher than I think a lot of people anticipated and higher than the last few months of the series had showed as well. And so, Paul, when we look at this, I think I tend to agree with this piece in the Wall Street Journal that you don't need to panic right now because it's one bad number. It's not necessarily the start of a new trend. It could be an outlier. We just don't know yet. But this was a bad inflation report any way that you want to slice it. I find no silver linings in this. Mm-hmm. But it's one bad inflation report, and it just is a reminder of the thing we've been talking about for the last few months, which is, hey, at this point, I don't think recession is the biggest thing we need to be worried about. We need to be mindful of a potential return of inflation, and in doing so, we thought it was a little bit too early to declare victory, and the Fed needs to keep its foot on the gas and make sure that they are doing what's appropriate to get inflation down before starting to talk about rate cuts.
There's two ways to look at the report yesterday. The Wall Street Journal piece, Chuck, that you were mentioning sort of outlines more of a year-over-year look back, and they emphasize that core CPI, which you touched on just a moment ago, which now sits at 3.9% year-over-year through January's report, was at 4.7 in July of 2023. So encouraging, the Wall Street Journal mentions that, hey, that has come down from 4.7 in July to 3.9 on a year-over-year basis. However, month over month, that same core CPI data, as you mentioned again, was 0.4%. That was the highest since April of 2023.
Yeah.
So the year-over-year trends, you can look back big picture and say, hey, over the last 12 months, we have made substantial progress. However, if you look more on the near-term month-over-month data, that's where you have to take a bit of pause and say, gee, inflation historically has been extremely difficult to get that last mile completed, to get it back to the Fed's target. And perhaps some of the readings that we're seeing here are alluding to that fact that while getting from 9 to 3.5 or so, that was incredible, the pace that we came at. We had a huge shock on the supply side, on the good side of things. Perhaps that supply shock subsiding allowed for us to make that substantial progress. However, like I mentioned, the last part of it here, that's where it gets a little bit trickier. And I thought Bloomberg did a great job today in one of these pieces, Chuck, outlining the contributing factors to US CPI, to inflation over the last 5 years. And if you look at this chart at the start of inflation picking up, it was pretty evenly spread between the four categories. The four categories being food, energy, goods, and services that they outline in this chart. It was a pretty even split. As time has gone on, you've seen energy actually improve to be a disinflation factor. You've seen food have less of an impact when we talk about goods and not goods, eggs and some of those other items. Those have subsided. But really, the services component of things now is almost the majority of the impact going towards inflation. That is the hardest piece, Chuck, to knock out. It's the stickiest of all inflation. So when we step back big picture, declaring victory too early, this is because the services piece can be so stubborn and so hard to get back under control.
Yeah, so I think that from my view, this report, again, in terms of how I'm looking at it, gives credence to the idea that, look, we need to maintain a pretty hawkish stance against inflation right now because the battle has not yet been won. Mm-hmm. And we talked about this when Jay Powell and the Fed took a victory lap in December that we thought was kind of undeserved. And we've noted that in the last month or so, they've improved their messaging and kind of gotten away from that and said, yeah, we do have some more work to do. And so now I think ultimately the question is, what does it mean for interest rates, bonds, markets, all those different components? The first one, let's talk about interest rates. Coming into this year, there was a chance that the Fed was going to start cutting rates in January. Where January is obviously off the table because it already didn't happen.
Right.
We then said, okay, the market's now pricing in March, and this seems a little early. And I had noted, look, if everything goes right with the inflation numbers, the May or June Fed meetings are in play, and they should be in play. If things don't go right, if we have 2 or 3 more reports like this one, then you're not getting cuts in May or June. You might even end up with a hike somewhere in there, and you're probably not getting cuts this year, quite honestly. Mm-hmm. And that's fine. Where the rubber meets the road on all of this, and this is where things get a little bit complicated here, is trying to figure out the effect on the bond market as a whole, because there are so many different components here. What does it mean for the short end of the yield curve for short-term bonds? What's it mean for long-term? What's it mean for corporates? What's it mean for high yield? What's it mean for treasuries? There are a lot of different components there. The simple math is, hey, if inflation is more persistent, at the very least, the short end of the curve is dramatically overbought. Mm-hmm. You still got the 2-year treasury right now is sitting there at 4.6%. And if inflation is going to, keep printing more like this, 4.6 is low. That number needs to start with a 5 probably.
Right.
The 10-year at this point is at 4.3, and it's kind of a pivot point. I look at it and I go, I don't know. If you get a few more like this, maybe it drifts a little bit higher. But do we really expect 10-year bonds to be, yielding 5% for, an extended period of time? I find that a little bit hard to believe in a world where nominal GDP historically has been below that recently. It's just tough to reconcile. So I think that trying to figure out where yields go, I think there's probably some upward pressure and drift that continues here on them. And what that means for individuals is that mortgage rates probably not going to be as low as they were, a couple months ago when yields bottomed. Mm-hmm. It means that if the Fed can't cut interest rates, credit card interest rates aren't coming down soon. You're not going to have auto loans coming down in rates either. So I think that from a consumer, from a household-facing perspective, I would expect that if this continues, you're probably going to still find really good rates on savings accounts at banks. But if you're in the business of borrowing, if you're trying to buy a home, a car, or anything else, you're not getting any relief on that front. And that's a reversal of what we've seen the last few months.
Agree with all those points, particularly the shorter end of the curve. That sort of re-emphasized my thinking that if you have a client that is debating between a money market or locking in a 9-month to 12-month CD, previously I would have told you, gee, maybe with rate cuts coming this year, they may want to lock in a 9-month CD at the rates where they sit today. Now you kind of sit back and say, gee, I don't really think money markets in the near term are really going to make a substantial change because of these rate cuts sort of being shelved for a bit. There's less of a worry there. Again, things could change, and I do want to make a point to that effect that things could change, particularly on the futures front, Chuck, the CME futures that we often reference when we're looking at Fed fund rates and what they could look like for future meetings. In this Wall Street Journal piece, they point out, does it matter if they start cutting rates in June instead of May? And the point I want to emphasize is that when you're looking at futures, whether you're a sports fan and you're looking at futures for your team to win the NBA championship or to win the Super Bowl, they are futures. They're projections that can change at a drop of a hat. If a star player gets injured, all of a sudden the future doesn't look the same. The same thing applies here for when you're looking at these rate readings for future meetings. We saw in March previously a much higher likelihood that there was going to be a hike if we were having this conversation in December or January. You get reports like this, they can change very quickly. So this idea that they were to occur in May or June, these cutting of rates, like you just mentioned, Chuck, you get some reports like this, forget about those probabilities. They can shift dramatically very quickly.
Let's take a quick break, and when we return, we're going to talk about the latest evidence of the Max Stupid phenomenon now hitting stock markets as we discuss Lyft's earnings after this.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Over the last couple of weeks, we've discussed the idea of max stupid as it relates to the stock market. And the premise of it is very simple. It's that during different bubblicious periods, you reach a point, usually after the initial peak, where people do the dumbest things possible in markets, and they may even work for the short term before there's really some pain that's felt. And this is a reference to back in the tech bubble. When the tech bubble initially burst, you saw the NASDAQ fall around 40%. It was, a pretty meaningful fall where it went from, I think, around 5,000 on the NASDAQ down to somewhere in the 3,000 range. And it was something where I remember it very clearly that, we looked at it and not markets, but people said, well, gee, we finally gotten through it. We got rid of the excess, and gee, I'm glad that's over. I'm glad that we don't have to do that again. And that was not Max Stupid. Max Stupid instead was in the summer of 2000, after that initial popping, the NASDAQ rallied another 45% from where it had fallen, not back up to where it was, because remember, if you lose 40 and then make 40, you're not back to where you were. It rallied up to about 4,300, and then over the next 2 years went all the way down to 1,100. And that second rally, that 40% rally, is what is referred to, what I refer to, and what I've seen other people talk about is kind of Max Stupid. It was just, hey, it's done. Now we can bid these back up to crazy valuations again. And I've noted in the last week or two that we've started to see some things that are similar to that. ARM, the chip maker that specializes in mobile phone chips, reported earnings that were fine last week. They weren't bad. They beat expectations. They were good earnings. And the stock over the next 9 trading days subsequently doubled.
Mm-hmm.
There's no impetus for that. It wasn't like they announced, hey, our revenue's going to double or our profits. It was just, no, we beat our profit numbers by a few percentage points, and we had a good quarter, and now we're free cash flow positive, and the stock doubled. Today we've got another instance of this, where Lyft, the ride-sharing company that is a much smaller, much less successful, much less financially stable competitor to Uber, reported earnings after the bell yesterday. And they reported that their margins were going to expand by 500 basis points. A basis point is 1/100th of 1%. So they reported that their profit margins were going to expand by 5%. Now you might say, gee, why, that sounds big, but why does that matter? Well, the reason why is that would have been an improvement of over 10% in their profit margins. And It was then revised an hour later. First, they took an hour to correct it. Normally, in these situations where there's something that's misstated, you basically get an instant correction. They didn't correct it until an hour later when they actually did their earnings call. And they said, no, our margins aren't expected to expand by 500 basis points. That was a typo. They're actually going to expand by 50 basis points.
0.5%.
So the stock originally was up 60% on this 500 basis point move. It's still in trading today is up 36%. And what's so problematic to me about this is you have a company that on a key number reported a materially false reading. It was wrong. It might not have been intentional. It wasn't intentional. Like they fixed it. It took them an hour, which is also dumb.
Mm-hmm.
But the big numbers that matter, they reported an order of magnitude larger than they said they were doing. Like a 500 basis point versus 50 basis point improvement is huge. And the stock is still up 36% for some reason. First question is, how can you trust any of the numbers that they have if they can't even get the big ones right that they're publishing? I mean, quite honestly, this is a quarterly required filing for a publicly traded company, and they put an extra 0 in it. If they can't get that right, well, how do you know that the other stuff that's more complicated than that is right? It's the first question I have.
Immediately what comes to mind to me is Dumb and Dumber, where, sorry, Mr. Perfect, sorry we never made a mistake before. But you're right. It's a little different that you can't really make
accounting. Accountants are like offensive linemen and kickers. The only time you talk about them is when they do something wrong.
Yeah, I like that analogy. Refs, too, is another
I'm
good
sorry,
example
but that's
there.
the job that you've chosen. It's just how it is. If you want something where you can mess up a little bit, there are plenty of jobs where you can do that. Being an accountant for a publicly traded company is not one of them. So that's a little bit problematic. The second piece, so you go through all these revisions. Not all these, but again, one of these key numbers. And look, the Lyft numbers were fine. Like they're not awful, they're not great, they're fine. They think they're finally going to be able to get to free cash flow positive this year.
Right, I wanted to note that. Not saying that justifies a 35% rally, but
and so you're up 35, 36% on that? If you thought the stock was worth 60% more when margins were going to improve by 5%, a 0.5% margin improvement is still worth more than half of that in terms of the daily jump?
The only thing...
Max stupid. I'm sorry, we're getting... like. There's really dumb stuff happening in markets right now.
The only caveat that I would throw in there is that it's a very heavily shorted stock. Not saying this earnings report really justifies necessarily covering all those shorts, but that's perhaps why we're seeing pretty heavy volume numbers and maybe a little bit out of the realm on trading. This company, when it trades, when it releases earnings, it's very volatile. It's
yes, to the downside,
typically, but. When it does 0.5% margin,
this is a stock
expansion.
since it IPO'd, it's down 84%.
Yeah,
it's been a horrible stock, and now they report numbers that are materially inaccurate.
But they're going to be cash flow positive
and
this year.
And they take an hour to fix it, and people say, "Yep, bid it up 36%."
They're making money this year.
We're getting close to max stupid. This is the kind of stuff that you see then, in my opinion. Quick break here. Wall Street Watch and Ask Todd is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, following yesterday's sell-off driven by a hotter-than-expected inflation reading, markets today are slightly rebounding. The Dow currently up by 137 points, or 1/3%. S&P 500 up by 0.75%, and the Nasdaq up nearly 1%. Russell 2000 is up by 1.5%. 10-year Treasury yield down by 2 basis points at 4.28%. And crude oil up nearly 0.5%, trading just above $78 a barrel. Kraft Heinz shares down by 5% after the food maker reported a sales loss of 7% in the fourth quarter, while its profit slumped 15% as higher prices weighed on the company's sales as inflation pinched consumers spent less, sought deals, and shifted to store brand products. Meanwhile, Airbnb reported better than expected revenue for the fourth quarter as demand for short-term rentals picked up steam in recent months. The company previously warned in November that macroeconomic trends and geopolitical conflicts may impact travel demand. However, growth in the period still exceeded forecasts. Despite the beat, Airbnb shares down by 4%. Elsewhere, Robinhood up 12% after the trading app beat fourth quarter expectations, where the company posted net income of $30 million or 3 cents a share on revenue of $471 million, above expectations of $455 million. And Zillow shares jumping by 9% after the real estate marketplace posted earnings of 20 cents per share on revenues of $474 million, above expectations of $452 million. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we're joined now by Todd Lutsky from the law firm of Cushing and Dolan. Segment is Ask Todd, and this is, as always, your opportunity to ask Todd your estate planning questions. So we've got the phone lines open at 888-205-2263. Get calling on that number if you'd like to ask Todd for his opinion on whatever legal problems related to your estate are bothering you right now. That phone number, again, is 888-205-2263 if you'd like to call Todd live on air. 888-205-2263. Get all lined up so that you can be ready to go when it's time for Todd to answer your questions. Mr. Lutsky, how are you?
I am never better. How are you doing? I'm always afraid to ask.
I'm okay. Dealing with a little bit of not feeling great about my body right now.
Yeah?
Well, my wife said that I should do some lunges in order to stay in shape.
Okay.
I thought it'd be a big step forward.
It would be. It would be a big step forward. You have to get used to that.
I'm considering it, so we'll see what happens. Todd, I want to talk about probate today.
Yes.
What is probate?
Yeah. So this is something that people always say they want to avoid, but I really want to help you understand why you want to avoid it. And let's just begin. First of all, if you die, you got to file a will. All right. Well, when you file the will, you got to petition the court to, appoint the personal representative. Usually the person listed in the will, by the way. Doesn't mean it is automatically that person. What do I mean? Well, after you file the will, then you have to notify all the heirs at law, send a letter out, and guess what? They have 30 days to decide if they want to challenge this and say, no, you shouldn't be the personal representative. Then you got to go to court and fight about why that should be the case. Not an easy win. Again, the judge is likely to say, I think we should try to honor the decedent's wishes, but you're welcome to fight it. Okay, so 30 days goes by, and lo and behold, nobody objects, let's say, and then you go back to court. Not you, the lawyer, you've hired someone to do this, goes back to court on what they call a return day. What does that mean? Well, you go back and the judge says, now you are appointed, like you're knighted. Now you get a little certificate, a little piece of paper that says, you are now the personal representative of the estate, which means you can take that piece of paper and the death certificate and go to an institution, a bank, a brokerage house, anywhere where the individual decedent owned assets in their own name. That's a probate asset. Then, before you had that, they would not talk to you. Now that you have that, you can go in and they will magically talk to you, and you can go ahead and get the money, roll it out, open up an estate administration account, and get a new ID number for that account. Oh, well, wait. Then you have that. Now you get to pay all the bills. And by the way, you get to do an accounting as to all the money that goes in and out of that. Not only in the beginning, but another one at the end of the year. Oh, you also have to notify all the creditors. They have 1 year to file a claim against the estate of only the probate assets, by the way, only the assets that are in your own name. Now, if you've done your planning and you've got a probate, you've got assets in your trust, well, those aren't a probate asset. They're not available, or jointly owned assets and the like. Well, okay, they got to wait an entire year to keep this open for these creditors to file this claim. Well, if that's not enough, now you have to get an accounting done. You have to go start listing all the assets that you have in your own name, along with the corresponding value. Wow. That's called an inventory. Got to file that. I don't know yet if I've said enough to tell you why you should probably want to avoid this.
You've said a lot.
That's a lot. And it gets worse. I mean, if you happen to have a piece of property in, like, Florida and you forgot that it's in your own name, now you get to double your pleasure. Now you can file again in Florida.
You got to do both states.
Oh, yeah, it's a lot of fun. Yeah, it's double the fun. So, folks, if that isn't enough reason to get your ducks in a row and do some planning, I don't know how else to really give you that. And that's just sort of the tip of the probate iceberg.
Talking with Todd Lutsky from the law firm of Cushing and Dolan. If you've got a question you'd like to ask Todd live on air, our phone number here is 888-205-2263. That number again is 888-205-2263. We're going to take a quick break now, but when we get back, it's right to your calls with Todd. So again, get calling at 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing and Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, You'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
I'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person. With their newest location in Massachusetts, connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
As promised, we're going to get right to your calls with Todd Lutsky. First up, we've got Robert in Worcester. Robert, what is your question for Todd?
Hi, good morning. Thanks for taking my call.
Sure.
Just a quick question. I'm considering putting some real estate in an irrevocable trust for the benefit of my kids.
Okay.
So they'd be the beneficiaries.
Are you married?
Yeah.
Okay.
And I guess I'm just concerned that what if at some point they want to sell the property and not want it anymore? So what becomes of the proceeds of the sale of that property?
So the first question I have is how old are you and your wife?
Mid-50s.
Mid-50s. So the type of asset. So are you worth well under $7 million?
Yeah.
Okay.
Yeah, I'd say that.
Yeah. So my point is, I'm thinking about it from estate tax perspectives, right? Right off the bat, I'm not seeing why we would be doing an irrevocable trust in terms of giving assets and getting them out of your estate if we're not going to save estate taxes by making that gift, right, to the irrevocable trust. So we need to make sure it makes sense to do this. So if, on the other hand, you're saying, I don't know the size of your estate, but let's say I'm in the $2 to $3 million range, or maybe under the $4 million range, and I'm thinking even though you're a little young for it, if you're thinking about nursing home planning and protecting assets, well, that's an entirely different kind of irrevocable trust, one in which you will keep a lot more control over the assets and enjoy what's in there, from rental properties to the income to, I don't know what kind of property you plan on putting in there. But generally speaking, with an irrevocable trust, if you put it in, you're not going to be the trustee. You can retain the power to remove and replace the trustee while you're living. A trustee could be a kid. So you kind of direct whether or not this kid is going to sell that property or not, number one. But to answer your question, if in fact you're doing this and you still think it's a good idea, even though it might not be from an income tax, meaning a basis carryover standpoint, or from an estate tax standpoint, but if you do it anyway, once it's in there, I would make the trust a grantor trust, so income taxes are still paid at your level, not at the trust level, number one, going forward. And number two, if you're not going to retain any right to the income or the principal, you still can direct when the trustee sells it. The money would flow into the trust. The money would remain in the trust for the benefit of the kids. And then you'd have to draft the trust document in a manner that you want in terms of how those monies can come out of the trust to or for the benefit of your children and or grandchildren. And or maybe make it, creditor protected, divorce proof for those kids and those grandkids. So you can do almost anything you want with an irrevocable trust. My advice to you, just because it's radio and it's tough to deal with all the issues, just know that there's a lot to think about before you just give away a house to an irrevocable trust. It may not even be the right thing to do at this point from a tax perspective. So hopefully that helps. But folks, what that really does is lead me to the guide that we're giving away, Back to the Basics, which educates folks like Robert, like everybody who maybe hasn't done their estate plan yet. Maybe they want to learn. This is one of my favorite because it's all about education. It is basically my recommendation to a hypothetical client on how to do an estate plan. You can put your own numbers in, see if it works for you. It talks about all of the items, the wills, the healthcare proxies, the powers of attorney, funding a trust, how to put the assets in, how the trust works. It's basically going to get you off the dime if you've never really done estate planning. This might, in fact, be a plan that works for you. Who knows? Get the guide and educate yourself so you don't make mistakes on doing things on your own. 866-848-5699 or legalexchangeshow.com. You can download it there. Again, folks, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another one for you. Let's go to Rosalie in Springfield. Rosalie, you're on with Todd Lutsky.
Hi. I'd like to ask you this. If a person has been on Mass Health for a long time but has never been in a nursing home, does the state still, once the person dies, does the state still go after their estate to try to recover any money that was spent on them through the years?
Yeah, Rosalie, that is a really good question. I'm asking this, though. You're saying it's like they're on some kind of community-based Medicaid, right, where they're still in the community, living in the community, but because of maybe a disability or some other reason, they're getting Mass Health. Is that kind of what you're saying?
Kind of, yeah. Yeah, but still living in their own home.
Right, so they're living in the community. So, yeah, so this is a problem. The answer is yes. They do want to be repaid for the assets that you have. Now, remember, you probably, to get on Mass Health, you might not have a lot of assets to begin with, even though you're living in the community. Now, does this person have a house?
Yes, at this point, yes.
And is that house the biggest asset of the estate, probably, I'm guessing?
Probably. I'm not totally sure on that.
Yeah, they might not have a lot of money is what I'm talking about.
No, I think this person does. Different things like bank accounts, stocks, that type of thing. It's not up into the millions, but, probably like, I'm trying to think, I don't know, maybe 200,000-300,000, something like that.
Yeah, so it is making me, scratch my head a little as to how, and again, I know we don't have all the facts, but it is making me scratch my head a little as to how someone like this might be on Mass Health in the community. But yes, depending on the kind of Mass Health they're on, which again, we don't know exactly, I'm going to say yes, there's a really good likelihood of an estate recovery. And this is, again, why people should do their planning, right? Because if this person had set up, a trust and put their house in, even if they just put their house in, which is not uncommon for a lot of folks, it's their biggest asset, and they put their house in one of these irrevocable trusts, now what? Well, now it is no longer a probate asset. Never mind the fact that this person might end up in a long-term care facility 5 years after we set up the trust, which would make it protected from long-term care Mass Health, which is different than what's being asked here, which is community Mass Health. Two different animals, but the rules are very similar. Okay, so by having it in the irrevocable trust, we would be protecting it even from the Mass Health long-term care Mass Health And if she had done this or he had done this and never went on Mass Health, but other than in the community, well, they're living. This asset is no longer a probate asset. Why that's important is estate recovery, which is what you're talking about, happens to happen only against probate assets, not assets that are in a trust, right? So they avoid probate, they avoid estate recovery. So even though this person would die if the house was in that trust, and never went to a nursing home, the state would not be able to go after or lien that house to pay back even community Mass Health. So hopefully that was helpful.
Mr. Lutsky, thank you so much for the time today.
Always a pleasure.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com.
Still more to come here on the Financial Exchange, including a discussion of why car ownership just continues to get more expensive, even beyond the sticker shock that you see when you're buying the vehicle. Also going to be doing a little bit more chatter about the commercial real estate market and what is happening with offices, specifically in cities. And then a little bit of color on Apple, who is seeing some highly placed people in their design department leaving, and whether there's any issue brewing for them on that front. All that and more is going to be coming up in hour 2 of the Financial Exchange. Stick around. We'll see you in just a bit. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, it comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi Code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's DAVMA.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit DAVMA.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here, and we got markets now mixed after opening in positive territory after a no good, very bad day in markets yesterday. Dow currently is down 1 point. S&P is up 13. NASDAQ is up 54. So, again, still S&P and NASDAQ are in the green, but the Dow has just turned slightly negative after opening up for the day. 10-year U.S. Treasury down 3 basis points to 4.28 after rallying 16 basis points yesterday. We've got the West Texas Intermediate benchmark for oil down 1 cent at 77.86. Gas prices continuing to trend up in recent days. A big jump today, mostly due to what we're seeing in Florida right now, just with some stations cycling to higher prices. So nationally, gas prices up 3 cents a gallon to $3.25 at the moment. It's up from $3.22 yesterday, and a month ago we were at $3.07. So you've seen about 5-6% increase in gas prices over the past month or so, and that matches up with what we have seen in the price of oil. Also, when we look at gold, we've got gold down $6.20 an ounce to $2,001 even, and that's what we've got going on in markets today. Paul, I want to talk about the cost of car ownership, because this is something that is a continued problem here. We've talked about how the average price of a new vehicle that is going out the door is now in the high 40,000 range, which is just absolutely mind-blowing to me in a world in which the average American household, or the median American household, makes $70,000 a year, that you got 15 million new vehicles being sold a year at an average price of $48,000. It's just, it's a little bit much, quite honestly. And it's not that there aren't cheaper cars that are being made. It's just we're choosing these ones, and that's what it is. But even beyond the sticker shock that you get when you're buying your vehicle, there's a lot of operating costs that have been going up meaningfully as well. And I'm not just talking gas. I'm talking car insurance premiums, up 20.6% in the last year. And when we look at that, it's a combination of a couple things. First, labor costs. Tougher to find capable quality mechanics, and so those labor costs are up. Second piece, parts costs. Those are up as well. And so, I mean, that's kind of the whole game. If the labor and parts are more expensive, then yes, you've got that going on. The third piece is we've become even worse drivers than we were 5 years ago. We're texting more. We're distracted more. We're taking videos of ourselves with Apple Vision Pros driving while we're driving. I mean, we're really rather dumb when we drive. And it results in a bunch of accidents that cost money and cost lives. And the money cost, at least, ends up showing up in car insurance premiums.
The other piece here, Chuck, is interest rates have risen, right, on auto loans. That's the other part of this, is that you've got premiums going up on your insurance to own a car, and you've got borrowing costs as you acquire that new car. That was $40,000 in 2021, now is $47 or $48,000 for a new car, and you're borrowing the money to finance it from what was probably 4% to about 7 or 8% now. So as a result, AAA did a study and saw that in 2023, the cost of owning a car, which was gas insurance and some of these car payments, was $12,000 versus $10,700 in 2022. So a significant uptick there, really across the board, outside of gas, which has actually really not had a tremendous impact on that number. All these other components, though, the insurance premiums as well as the borrowing costs, those have really gone up quite a bit, and there hasn't been really much reprieve on the new car price. That has stagnated a bit, the increase, but still it's heavily inflated from where it was.
So I think that when we talk about just the prices, I come back to this because it all stems from this. Because if you buy a more expensive vehicle, it's then more expensive to maintain, to insure. If you have damage to it, if you get in an accident, it's more expensive to fix. And yet we keep buying just these ridiculously expensive cars. And I'm trying to figure out what the deal is on this, because just as an example, I'm going to pull they would all be pickup trucks if I just looked at the top three, but I'm going to pull the top three. I'm going to pull pickup, SUV, and sedan and say, look, what's the deal here? Best-selling car in the United States last year, Ford F-150, 750,000 units sold.
Mm-hmm.
So I go to the F-150 page on Ford's website, and there are actually affordable F-150s available. The base model, if you want to, if you say, look, I need a full-size truck, whether it's for work or because I'm just hauling the kids around, a bunch of hockey stuff, and whatever it is. Okay, if you just want the base model, the XL, you can get one for $33,000. You don't have to downgrade to a Ford Ranger. You don't have to downgrade to a Maverick or something. You get a Ford F-150 XL for $33,000. And I don't know if that's the perfect F-150 for everyone. Maybe you need the King Ranch or the Lariat or the Platinum, which get up into the $50,000 to $60,000 range. But if you want an F-150, you can buy one for $33,000. You might need to wait 2 months to get it because maybe they don't produce that many of those because they want the higher margins on the higher priced ones. And so maybe you need to order it and have it, it's got to be built and shipped out to the dealer. But you can buy an F-150 for $33,000. And my guess is Ford's not selling very many of those. I'm guessing that they're not. So then you say, okay, next on the list, best-selling SUV in the United States is the Toyota RAV4. So I head over to Toyota's website, and I say, okay, Toyota RAV4. What are we spending on those? And if you go and you take a look and say, yep, I got the RAV4 all pulled up here, and what's the cheapest one that I can potentially buy? You can get a RAV4 for $28,000. $28,000 is your base model there. And again, that's like 60% of the cost of the average new car that's being sold in the U.S. And then you go and you look at the other, options, and you have, the Limited's $36,000. They've got a hybrid Woodland edition. Where do you drive that? Is that like when you go to meet the Ents from Lord of the Rings? You got to drive that.
Yeah.
Wait, what's the deal? That's 36. The Woodland edition.
Yeah, you always see all these car commercials where they're going through deserts and through the woods and everything like that. Like, who's driving these places?
Yeah, it's not as exciting as driving through
trying to go to work.
Rush hour traffic.
The 440,000 people that are buying RAV4s are definitely taking them to the Gobi Desert just to see what they can do in it.
Yeah, let's go off-roading.
And I'm not saying if you actually have the money to spend, if you've got $40,000 to buy a RAV4 Hybrid Limited for $40,000, fine, go do it. I don't care. But if you're gonna complain about the car payment and everything, and just the car payment's so high these days, well, go buy the cheap one at $28,000, or go get a used one for $25,000, because you don't need to have that. It's the stuff that you get on the top line is stuff that 20 years ago we would honestly kind of be like, why do you need that? The one that baffles me more than anything else, I can't understand this. It's these panoramic moonroofs where the entire roof of the car is a moonroof. Not just like the little one over the driver, but like the whole roof of the car or truck is a moonroof. And I'm sitting there and I'm like, well, if you're driving,
you're never using it.
It's not useful for you.
Yep.
And how often do you really have passengers in the back seat who need to look up at the sky and say, gosh, look what's up there. Isn't that interesting? And that option costs like an extra $2,000 for the vehicle, and it's showing up on more and more vehicles because it's all fat profit margins for these manufacturers.
Nothing like cruising down the pike, looking up at the sky
Yeah,
as you whiz
Paul,
by at 60 or 70.
You've got kids, right?
Yep.
Did the kids ever say, hey, Dad, you know what would be better is if we could look at the sky the entire trip?
The sound that you get when you have, if you're going at a good clip, to have the sunroof open, I do it sometimes to keep my daughter from falling asleep on the way back from places so that we don't mess up.
But it doesn't need to be the full length of the thing.
No, I just do her side window.
Sure.
Just to emphasize the point that it is brutal on my ears, but I'm just trying to keep her awake. So the idea that I would need a panoramic roof is just far-fetched. To me, GPS, too, systems in the car, Chuck, I dealt with that buying
Why do you
cars.
need it? No,
Why would I bother to spend, I'm ballparking this is a couple years ago, several grand, I guess, to add in the GPS. Your phone mounted onto your dash and put a little thing on there, and you've got Waze, Google Maps, whatever you want to use right there, built into it. Why do you need to add in? Now, sometimes with the kids watching shows on my phone, I have wished for the GPS. But overall, I can make it through.
But even that brings up another thing that I'm seeing more of now. Hey, we've got screens on the back of the front seat so that your kids can watch movies. Why?
Right. Particularly with the prevalence of iPads.
If they want an iPad or something, give it to them. If you don't want them to have an iPad, don't. But why do you need the screen built into the back of the seat? What does that do for me? What? That to me is like the people who put a TV in the bathroom. Like
that I don't get.
You did what? You needed a TV where? No.
Yeah, and the John,
No. What's next? You're going to put one under the hood so that when you're, doing some engine work, you can watch TV while you're down there?
I would definitely never watch TV in that spot.
I mean, it's just my point continues to be, I don't care what vehicle you buy. You can find a cheap version of just about any car out there. And yet we're spending all this money. And this is why premiums keep going, because you buy the expensive one and you get in an accident and there's more stuff they have to fix.
Particularly the tech part of it, with more chips being installed
yeah.
in cars for sensory, lane detection, all those other things. That just adds more and more to the cost and makes them more difficult to fix when something goes wrong.
Let's take a quick break here, and when we come back, I want to touch on the state of the U.S. office market and what we're starting to learn as we get deeper into 2024.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited, dine in only. Well, today, as we all know, it's Valentine's Day, a day where you will likely eat at least one of those terrible heart-shaped candies with writing on them. The original company that made Sweetheart Candies went bankrupt in 2018, and the candies were discontinued. Fortunately for some, Sprangler Candy Company bought the rights to Sweetheart Candies and brought them back in 2020. Trivia question today. We mentioned this yesterday, actually. Which candy company originally sold Sweetheart Candies? Once again, which candy company originally sold Sweetheart Candies? Be the 10th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385. And the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, have you bought any skyscrapers lately?
Any office buildings?
Yeah.
I haven't. I've slowed down my pace. My portfolio's cut down.
Understandable. The Aon Center, which is the third largest tower in Los Angeles, sold for $147.8 million recently. So you were not the buyer of that building.
No, I just was a little too rich for my blood. Just $1 million or two too high.
Interestingly, it was 45% less than its previous purchase price back in 2014. So you own the building for a decade, and you sell it for 45% less than you bought it for.
Blows me away. It's staggering.
Now, that's just one building in one market, so it's not indicative of what you're necessarily going to see across the board. But the fact is, we've been talking about this, that this is just kind of this slow-moving freight train where these leases within a building and these mortgages on a building by commercial real estate landlords, they don't all come up at once, and it's just going to be something where it's unclear exactly how bad the damage is until we see this all play out over the next 8 to 10 years, because it's just kind of going to roll through all these different buildings in all these different cities on different timelines based on who the tenants are, whether they kept their leases, whether they got rid of them, and you don't know what the actual damage is going to be until the decade's up, I think.
Yeah, and then also the way that these terms operate on these loans, they are unlike your mortgage where you put 20% down. It's typically financed as interest only, so when they come up, it can be in a very...
Big balloon payment due.
Yeah, exactly. And so when you look at this going forward, typically what the lenders like to do is try and extend and just slough off these short-term fluctuations in the valuations of their properties, but it can become untenable when you have $1 trillion of commercial real estate debt coming due over the course of the next year, that not everyone's going to have that option. And particularly on the office space side of things, if you look at the distressed properties throughout the U.S., they account for about 41% of them, according to MSCI. So it's really hard to see if all these buildings are going to be able to be extended and held, because there isn't really that the demand for tenants to take over these buildings.
No, and the thing that you have to also think of is, let's say that I buy that Aon Tower in Los Angeles, just as an example. Because I'm spending way less on it than the people who bought it before me. Granted, I'm probably paying more in interest because interest rates are higher.
Yep.
But either way, I'm probably in a position where I know what that looks like for me, and I can probably offer cheaper rents in that building than the previous owner used to be able to, because my mortgage is half as big. It's just how it's going to end up looking. And so if that's the case, then that puts downward pressure on rents in other buildings, which in turn makes them less valuable, which means you got to go through this whole cleansing process of getting these old loans out in order to get real estate values down to where it finally makes sense for someone to come in and say, yes, I'm willing to operate this, and I can cut the rents by X amount and still make out with, how my numbers work.
Would you be against the idea of buying it? I know it seems like the worst time to buy it, but a 45% discount from where it was bought a decade ago. My question to you is, are you a believer that the traditional office structure is dead and gone, or are we in a cyclical time period where it returns back, perhaps when the employers have more leverage and we're not in as hot of a labor market?
Well, let's look at the interest rate piece of this, because, again, I don't know the exact way that this is going to be structured, but let's say you take out a $100 million loan and you're paying 8%, so you're paying $8 million a year. previously, prior tenant might have had a $200 million loan at 4%. So it's about the same, whatever it might have been. I don't know what the path back to those lower rates is. And so if the appreciation is based on lower rates, I don't know. I got to see what the rents are.
Yeah.
And that's a tough thing to guess right now. Quick break here. When we come back, we got the trivia answer.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, which candy company originally sold Sweetheart candies? That would be Necco. They started selling candies with writing on them back in 1866. Necco started calling the candy Sweethearts in 1901. Donald from Lancaster, Mass. taking home that Financial Exchange Show t-shirt, and Donald's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only.
Paul, you familiar with the work of Bart Andre?
I am not.
So Bart's been with Apple since 1992. 32 years, if my math is correct, and I checked. It's spot on. He told people at Apple that he is going to be retiring, which leads to a headline from Bloomberg, Apple's longest-serving designer to depart company, adding to Exodus. This is one of those where the framing of this piece bothers me more than anything else. Someone retiring after working 32 years at a company is not an exodus. It's called a retirement, and it happens to everyone at some point. Not everyone. There are some people who unfortunately pass away on the job, but if Bart's been working at Apple for 32 years, I'm assuming he probably got there somewhere after age 20, so he's at least in his 50s, maybe his 60s. He's probably made a boatload of money.
I was going to say,
he's
just probably done all right.
Probably, hey, I'm good. So the framing of this, where there were a few other people in the design department who left, recently, and saying, "Oh, like this is adding to that." No, this guy's retiring.
The point the article is trying to make is that you have these legacy holdovers from the Steve Jobs era that were instrumental in the design development and a lot of the products that we use frequently today. So perhaps posing the question is, will they continue to have strength on the design side? That's the way I would kind of interpret it.
I would say yes. I mean, I remember the same questions when Joni Ive left the company back in July of 2019, and that was nearly 5 years ago now, and the questions were, this is the guy who built, the iMac and built the iPhone, not built it, but designed what they would look like. He was responsible for that. How are they going to survive? They've done okay in the last 5 years. They're only worth $3 trillion. I mean, maybe with Joni they'd be $4 trillion. I don't know, but they've been fine. If there's one place where I absolutely trust Apple, the design of their products is fantastic.
Yeah.
And that's consistent across the board. I mean, when's the last time you picked up an Apple product and were like, oh, I don't know why they built it this way. The complaints we have are, hey, it's a little expensive. Hey, this is last generation. Hey, not how does this work?
That's true. Innovation is a question, but
totally.
Design is
totally.
Yeah.
I think if there are places where I have questions, what comes next to drive marginal revenue, and how are they going to build? What is that next thing going to be for them? I know that when they have that next thing, the design is going to be fantastic.
The Vision Pro.
It's a beta product.
I'm just messing with you.
Did you guys see, by the way, while we're talking that?
Zuckerberg?
Yeah, did you guys see Zuck's video?
I didn't see the video.
I saw the link for it, but I haven't looked at it yet.
It's about 3 minutes long, and I found it on Twitter today, and I watched it. It's Zuckerberg making the argument that
ours is better.
Yes, it's hey, the what do they call theirs?
Oculus.
The Quest, I think. The Oculus Quest, I think, is the new one.
Yes.
And he's like, the Quest is, I'm convinced it's just a better product. And I can't tell you how many people I saw who said, this is like Steve Ballmer in 2007 saying that no one would use the iPhone for business. It's got that vibe to it. And look, I don't know which one of these is better. I haven't used any of them. I'm not going to spend $3,500 on a virtual reality product. I'm not going to spend $500 on one because I'm fine with reality. I don't need it to be virtual. I'm here, man.
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to visitusvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Walmart is in talks to buy TV maker Vizio. The reason is not just so they can sell TVs, but really they want to own the platform that the TVs presents to households who buy them in order to potentially sell more ads to individuals who buy Vizio TVs. Your thoughts, Paul?
The question that I have here is I understand what they're looking at. Walmart makes its bread and butter, the money off of the grocery business, which we all know is a low-margin business. So they're looking to diversify their revenue streams. Ads is dominated by Amazon, Meta, and Google, so they're trying to make some inroads here. That's why they would consider the purchase. My question lies in Vizio sells these low-priced TVs that are, relatively solid products. They're mentioning here the ads that they'd be selling, Chuck, are when you turn on the TV and you use some of the free video service. So I'm a little confused as to how much of that is it. I'm thinking about when I turn on my TV at night, am I seeing ads that are from the TV maker? I don't understand that part of it.
Let me give you an example. So have either of you bought a Samsung or LG TV in the last 5 years?
I've had one before,
I have an LG web TV.
Do either of you use like the default interface as opposed to like a Roku or Apple TV or Amazon Fire Stick?
I don't use it, but I'm familiar with what you're talking about. There's ads all over the place on it.
So that's what it's talking about,
Yeah.
I think, Paul,
Okay.
is if you don't plug something in, you have this default platform that's preloaded on a bunch of smart TVs now.
Like Paul, you have to see like a home screen to even get to cable.
Okay.
Like you have to
Because
select
I'm thinking
HDMI 1.
Xfinity, when I pop on.
No,
but
this
it's
is like
the
before
screen
that.
prior to that.
And like I have an LG TV in one of our rooms, and if you go like there, they have like a Netflix app on there or a Disney Plus or
Yes.
whatever they are.
Gotcha.
And so I think it's the ability to have the ads on that native platform without anything plugging in.
Okay.
But one of the things that I'm very wary of is that a lot of those, if you go and look at like the privacy stuff as it relates to those native platforms, it's generally pretty bad. I mean, I'm sure it's no worse than Apple or whoever else, but I'm kind of like, look, Apple already knows whatever I'm doing on my phone.
Mm-hmm.
I'll use the Apple TV, and at least one company has all my stuff in one place as opposed to it being spread amongst a bunch.
Sure.
My guess for this is if this deal were to move forward, then you would see very subtle advertising. So you would log on to said home screen. You might see a banner ad of Walmart like right away, or you might see a 10-second clip or something like that. It's not going to be like 90 seconds of commercials.
No,
from
but
Walmart.
it would be, so let's say that on your Vizio TV, you watch a lot of Diners, Drive-In, and Dives.
Mm-hmm.
I definitely
Great
do that.
I know, fantastic
Yes.
show.
Saturday
Like,
nights. That's my Saturday night.
This is why I brought it up.
My wife is like, you're watching this at 9 o'clock on a Saturday?
I don't know. What do you want to do? Throw a triple D.
Look, we all need a little
What's
Fieri
doing?
in our life. That's
Yeah.
all I'm saying.
Yeah.
And so, okay, Walmart says, hey, you watch a ton of this? Great, I'm going to advertise you this grill set. And that's what's going to be on the home screen.
Mm-hmm.
Hey, you know what, Paul? You watch a bunch of bowling matches? Great. Here is an ad for bowling shoes that we have. And that's what's going to show up on the home screen. So that's how I think they're going to try to build it.
Got it.
Is when they have all that data internal. Let's take a quick break. When we come back, we got a little bit of Stack Roulette coming up after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001. 4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Paul, we got to have a serious talk here. It's about the Tooth Fairy.
Oh boy.
There's a piece in the Wall Street Journal. Tooth Fairy inflation is real. I'm going to quote here. She gave her daughter a $100 bill decorated with glitter and tiny removable rhinestones, and she kind of lost her mind when she found it, says Lawson, who lives in Temecula, California.
Ka-ching.
$100?
Seems
decorated
reasonable.
with rhinestones?
Seems reasonable.
Where does one even find rhinestones?
Amazon, probably.
She wanted to make the Tooth Fairy experience magical and extra special for her only child. Look, every parent does things differently. I'm not one to typically critique parenting because, if we're being honest, like, parenting's freaking hard.
Mm-hmm.
Yeah.
It's not easy. It's
especially if you're in my house last night.
It's like,
oh boy, what a night!
Nice tease. What
there's nothing that makes you feel better or worse than being a parent, but it's also like you're taking a test that you don't get the results back for 40 years, and so you just like, hope I wrote this answer right, and you won't know for 40 years if you actually did.
I have a hunch what my grade would be in some moments.
No, like, look, all of us screw up because, like, we're all figuring it out on the fly.
Yeah.
No one has a clue what they're actually doing, and any parent who pretends to is just lying to you.
Yep.
But $100 for losing a tooth?
Is that all the teeth? You just pay up front?
I will note this mother is a model and actress out on the West Coast. Not to judge, but to judge a bit.
Oh, we can judge this.
I don't care who you are. I don't
She
care.
has a dramatic profession.
I don't care who you are.
Goes a little over the top, clearly.
$100 for something that happens to everybody?
Here's the other thing about the dollar piece. The kid's not going to spend that money. Oftentimes, they're just going to tuck it away somewhere. It's just going to sit there.
Don't kids start losing their teeth at 5?
Yeah, I was wondering
You're
that.
giving a 5-year-old $100?
My kid's 5 now, and no signs yet.
Would you trust him with $100?
No.
No.
You know how many dinosaurs and animals we would have that we already have?
Like real dinosaurs?
Could have with $100 maybe.
Sounds great. So I just don't know. And this is it's like all these parents are competing because their kids talk about, oh, I got this, I got. I understand wanting to do things that are special for your kids, but they should be based around actual accomplishments, not losing a tooth.
Yeah.
I'm fine if you want to say, like, oh, like, yes, there's this tooth fairy, and then, like, you leave a couple bucks under their pillow. Delta Dental, who's the biggest dental insurance provider in the country, says that the average payout for a tooth last year was $6.23.
What?
Look, if you want to spend $6 on a tooth, it's ultimately you're going to spend that money on the kid anyways. So who cares if you give it to him in the form of a tooth fairy payment?
That's the principle. I'm thinking like $1.
You're
Fine.
still on $1? Okay.
I haven't done it yet.
$2.
No.
I think a $2 bill is nice because it's unique.
Yeah, I mean that would
And
be unique.
also, you can't spell tooth without TOO, which rhymes with TWO.
So $2.
$2 a tooth.
All right, I could do $2.
Feels about right to me.
$6.
But, there's a guy who's a dentist that they interviewed here who says that some people are giving their kids video games or an iPhone. An iPhone? You're giving a 5-year-old an iPhone?
Yeah, son, you could use an upgrade.
Oh, my goodness. What are we doing here? We've completely lost the plot. In the UK, someone gave their daughter 60 British pounds, a letter, and a silver fairy necklace, along with a Louis Vuitton bracelet. They said their husband purchased the bracelet on the day their daughter was born and felt like the right time to give it to her. You don't give a 5-year-old Louis Vuitton anything. They're going to eat it. You know where it's going to end up? Hey, Daddy, I buried it in the mud. And I say this as someone who loves, like, toddler. Like,
I brought it in the tub with me.
I think toddlers are fantastic because they're the truest people that we have. Like, they tell us the truth about everything. But, like, my toddler loses stuff all over the place because that's what toddlers do. You don't give a toddler a Louis Vuitton bracelet. You give them one from, Pretty Pretty Princess, the game that cost $8 from Milton Bradley.
What is this world coming to?
My goodness. It's unbelievable. I'm
baffled by a video game. Video games are like $70 now.
Most 5-year-olds can't even play video games well.
That too.
I mean, you
play them well.
Listen, I'll take on any 5-year-old and absolutely destroy them in any video game that they want to play.
Sounds like a challenge.
Yeah,
Just to all our listeners out there at 5 years old.
So I just we're getting a little bit nutty here.
A little bit.
We're getting a lot nutty here.
Yeah.
It's you lost a tooth. Okay, here's a couple bucks.
Keep it moving.
Let's not make a big deal about this. You know, it's fine. What do you got, Paul?
What exactly should you eat? A $190 million study going down in Baton Rouge, Louisiana, is trying to figure out what the perfect nutritional diet should be by testing, I believe it's 10,000 participants in an NIH study where they are being hooked up to all sorts of different monitoring devices and eating various diets from high fat, low carb, added on sugars, heavy on vegetables, every combination that you can think of, and they're being tested and monitored to try and see what the most appropriate diet is. And really the focus of the study is there has always been the common refrain, of course, of eating your fruits and vegetables and things like that. But there is some arguments out there that different diets work better for different people depending on how they process different foods. And this is what this study is trying to focus on, is trying to find the best diet out there, or to make it a little bit easier for you to go to your doctor and for them to point to, hey, gee, you should do this based on your metrics. Do you think they'll find
It's fine. I don't know if they're actually going to find anything out.
It's an expensive.
The human body's freaking complicated.
It is very
I don't think you
complicated.
can solve the human body with $190 million.
No, and I do agree with the sentiment that different things work better for different people. It's finding a balance. Ultimately, isn't it simple as just calories in, calories out?
I come back to Michael Pollan, who's a nutrition writer. Eat food, and by that he means not a bunch, like don't eat just a ton of processed stuff. Like eat real food, potatoes, steak, whatever. Like eat stuff
Vegetables,
that is real. Even like chicken, like stuff that's just not been heavily processed. Mostly plants. You don't want too much meat in your diet necessarily, and don't eat too much of anything, and you'll be fine. I think we overthink this and like try to make people feel good or bad about these. If you have dessert, it's fine. If you have a burger, it's fine. Just eat mostly real food. Don't eat the same thing every day, and you'll probably be okay. Where we get in trouble is where it becomes hard to do that, either because of lifestyle or income and things like that. It gets hard.
Getting fast food multiple times a week, it's going to add up.
It gets hard, and that's why I'm really happy to be almost through I made a triple batch of chili at the beginning of the winter. I got 3 servings left basically at this point, but it's been a lot of chili. I got one for lunch.
You said don't eat the same thing every day.
It's not every day. Triple batch of chili. It comes out to about 5 gallons of chili that I made.
Okay.
It's like a Kevin plot from the
It's basically Chili Tuesday at the Zodda household.
Keep an eye on you.
Replace Taco Tuesday with Chili Tuesday.
That's LeBron's trademark.
We're done for the day. We'll see you tomorrow on the Financial Exchange.